II. Macroeconomic concerns. Emerging macroeconomic concerns and agenda for next year. Policy vigilance over high international oil prices. Stabilizing the GST. Completing the twin balance sheet. TBS actions. Investment saving. Slowdown. Fiscal federalism and accountability. Privatizing their India and staving off threats to macroeconomic stability. To major global challenges. Survey makes a case for policy vigilance to deal with two global challenges. Downside risks stemming from rising crude oil prices and any setback to the ongoing recovery of the global economy. To major reforms which were undertaken over the past year. Introduction of goods and services tax GST. Addressing of twin balance sheet TBS problem. According to the survey, these reforms have helped to reinstate India as the world's fastest growing major economy. According to the survey, demonetization of high-value currencies, together with the rollout of the goods and services tax GST, has led to more people being brought under the tax net, and the formal economy is much bigger than what it is estimated at. Goods and services tax GST. Goods and services tax GST. About the Constitution. 101st Amendment Act 2016 introduced a national goods and services tax in India from July 1, 2017. The GST is a value-added tax that is proposed to be a comprehensive indirect tax levy on manufacture, sale and consumption of goods as well as services at the national level. It will replace all indirect taxes levied on goods and services by the Indian central and state governments. It is aimed at being comprehensive for most goods and services. Or GST is a value-added tax levied at all points in the supply chain, with credit allowed for any tax paid on input acquired for use in making the supply. It would apply to both goods and services in a comprehensive manner, with exemptions restricted to a minimum. Benefits of goods and services tax GST. 1. It will create a common Indian market. 2. It will improve tax compliance and governance. 3. It will boost investment and growth. 4. It will reduce the cascading effect of tax on the cost of goods and services. 5. It is also a bold new experiment in the governance of India's cooperative federalism. 6. GST will have a far-reaching impact on almost all the aspects of the business operations in the country. For instance, pricing of products and services, supply chain optimization, IT, accounting, and tax compliance systems. Other advantages. 1. Wider tax base, necessary for lowering tax rates and eliminating classification disputes. 2. Elimination of multiplicity of taxes and their cascading effects. 3. Rationalization of tax structure and simplification of compliance procedures. 4. Harmonization of center and state tax administrations, which would reduce duplication and compliance costs. 5. Automation of compliance procedures to reduce errors and increase efficiency. Coverage. GST is applicable to whole of India. J&K is the last state joining GST. Concept of destination-based tax on consumption. The tax would accrue to the taxing authority which has jurisdiction over the place of consumption, which is also termed as place of supply. GST would be based on the principle of destination-based consumption taxation as against the present principle of origin-based taxation. It is a consumption-based tax. Tax is payable in the state where goods or services for both are finally consumed. Existing taxes to be merged in GST. 17 different taxes and 23 different cesses have been fitted into GST. GST would replace the following taxes currently levied and collected by the center. 1. Central excise duty. 2. Duties of excise medicinal and toilet preparations. 3. Additional duties of excise goods of special importance. 4. Additional duties of excise textiles and textile products. 5. Additional duties of customs commonly known as duty. 6. Special additional duty of customs. SAD. 7. Service tax. 8. Cesses and surcharges insofar as they relate to supply of goods or services. State taxes that would be subsumed within a GST are 9. State VAT. 10. Central sales tax. 11. Purchase tax. 12. Luxury tax. 13. Entry tax all forms. 14. Entertainment tax except those levied by the local bodies. 15. Taxes on advertisements. 16. Taxes on lotteries, betting and gambling. 17. State cesses and surcharges insofar as they relate to supply of goods or services. Exclusion taxes on entertainments and amusements to the extent levied and collected by a panchayat or a municipality or a regional council or a district council shall not be subsumed under GST. The local bodies of states could continue to levy such taxes. Applicability of GST. The GST shall be levied on all goods and services except alcoholic liquor for human consumption. Gst Council would be constituted comprising the Union Finance Minister, who will be the chairman of the council, Union Minister of State in charge of Revenue of Finance, and State Finance/Taxation Minister or any other minister nominated by each state government. The Gst Council shall make recommendations to the Union and states on important issues related to GST. E.g. taxes to be merged, tax rates, exemptions to be given, etc. Decisions be taken by Gst Council. Every decision of the Gst Council shall be taken at a meeting by a majority if not less than 3/4 of the weighted votes of the members present and voting. The vote of the central government shall have the weightage of 1/3 of the votes cast, and the votes of all the state governments taken together shall have the weightage of 2/3 of the total votes cast in that meeting. 1/2 of the total number of members of the Gst Council shall constitute a quorum at its meetings. Gst Exemption Limit. Taxpayers with an aggregate turnover in a financial year up to Rs.20 lakhs would be exempt from GST. For special category states enumerated in Article 279A except J and K of the Constitution, i.e. Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh and Uttarakhand. Threshold exemption limit is Rs.10 lakh. Survey highlights 1. Increase in taxpayers. Under GST, the number of unique indirect taxpayers increased by over 50%, 3.4 million. Voluntary compliance also increased under GST, with 1.7 million voluntary registrants. 13% of the estimated 71 million non-agriculture enterprises were registered under the GST network. 2. GST and states. The distribution of GST base among states is linked to their GSTP, with Maharashtra 16%, Tamil Nadu 10%, Karnataka 9% having the highest share. GST data shows that a state's GSDP per capita has a high correlation with its export share in the GSDP. 5 states account for 70% of India's exports: Maharashtra, Gujarat, Karnataka, Tamil Nadu, and Telangana. Do you know? Formal economy. A firm is considered to be in the formal sector if I it provides social security to its employees, or I it is registered under the GST network. India's formal sector non-farm payroll is greater than current perception. Formal non-farm payroll is 31% of the non-agricultural workforce based on a social security defined formality, and 53% based on a tax definition formality. The GST has been widely heralded for many things, especially its potential to create one Indian market, expand the tax base, and foster cooperative federalism. Classification of firms. All firms are placed in 5 categories based on their annual turnover: below threshold less than Rs. 20 lakhs, below composition limit Rs. 20 to 100 lakhs. The current upper limit of the composition scheme is Rs. 150 lakhs. Small and micro enterprises SMEs Rs. 1 to 5 crore, medium Rs. 5 to 100 crore. Large firms above Rs. 100 crore. Statewide distribution of goods and services. Statewide distribution of exports of goods and services. Top 5 states. 5 states: Maharashtra, Gujarat, Karnataka, Tamil Nadu, and Telangana. Statewide distribution of importing of goods and services: Maharashtra, Tamil Nadu, Uttar Pradesh, Karnataka, and Gujarat. States with the largest internal trade surpluses: Gujarat, Haryana, Maharashtra, Odisha, and Tamil Nadu.